Hello, everyone, and welcome to this episode of Ignition Time. In this episode of Ignition Time, I'm going to cover the drug like effect of stock market investing. Yes, you heard that right. The drug like effect of stock market investing and why certain apps like Robinhood, which have the intention of providing free trades, free stock market trading, free options trading, can actually backfire for investors and can be bad for investors. Welcome to this episode of Ignition Time, everyone. Let's just jump right in. Now, I've been noticing that the stock market has been going up and down, and the swings are pretty extreme in most days. And many of our viewers and subscribers follow Jim Cramer. Many of our viewers and subscribers follow other YouTube channels, other news networks that provide you with a daily update on the stock market. I'm here to tell you that daily updates, watching all your stocks perform daily is going to be emotionally very draining, because there'll be some days where your stocks go up and other days where your stocks go down. I'm here to tell you that the less you trade, the more successful you are likely to be in the long term in the stock market. I'm going to repeat this again. This is very important. The less active you are in the stock market, the more successful you're going to be in the long term, because watching the daily fluctuations of the market, getting in and out of investments, investing in things like Dogecoin, which have absolutely no value because Dogecoin was set up as a joke. Investing in these kinds of things is inevitably going to take you through an emotional roller coaster. When the stock goes up or when your asset price goes up, you're going to feel like you're the smartest person on the planet. When it goes down, you're going to feel like panicking. It'll be emotionally draining. You'll feel like you need to sell. So the reason I'm making this video is I want our viewers and subscribers to know that when companies like Robinhood provide you with free trading, what they are doing is essentially trying to build a customer base. So the more you trade, the better it is for companies like Robinhood. The problem is, fundamentally, the more you trade, the more likely you are to not have returns that keep up with the market, because there's a huge component of luck involved if you're going to be in and out of the market consistently. I am advising you not to watch the stock market every single day. I am advising you not to trade in and out of different stocks, not to buy stocks and then when they go up say, hey, I made a fantastic decision, because there is an inevitable component of an emotional roller coaster. Again, you're going to feel awesome when things go up in price, and you're going to feel absolutely terrible when things go down in price. Here's an article on your screen from Bloomberg: how Robinhood made trading easy and maybe even too hard to resist. This is the app that bought zero commission trades and essentially changed the industry. And it's a mobile friendly design. It's very easy to use. Is it essentially an app that is too good at what it does, and does it entice investors to invest and to essentially engage in more activities than they perhaps even should be doing? Folks, it becomes an adrenaline high. It becomes a drug-like effect. There's a bit of a rush when you buy a stock, when you sell a stock. Fundamentally, we as human beings are adrenaline junkies. We want to be able to buy a stock, sell a stock. In fact, if you spend a lot of time inside apps like Robinhood, it becomes a habit for you to check your stocks every morning. Folks, there's nothing wrong with checking what your stocks are doing. But if you're going to be trading in and trading out, this becomes essentially something that becomes addictive, and it sucks up a lot of your time. It'll become, again, like I mentioned, an emotional roller coaster for you. What you should be doing is doing your research on stocks that you want to buy, identifying at what price you want to buy those stocks, and essentially waiting till you're able to buy those stocks at the right price. Waiting is how some of the most successful investors in the world build fortunes. I assure you that if you wait and if you're patient, you will slowly build a fortune. You will slowly build an empire. But if you're in a rush, if you make an impulsive decision, if you make an emotional decision, if you rush into a stock, you will inevitably end up having an emotional roller coaster where you'll have the highest of highs and the lowest of lows. You may end up losing a lot of money. You may end up panicking, and you may end up selling your stocks when you should not be doing that. I want our viewers and subscribers to know that investing is a psychological game. It is not just an economic game. Investing is by definition designed to essentially separate the emotionally weak investors from the emotionally sound investors. Investing is a game in which, as the stock market is crashing, investors who panic will rush to sell their stocks. However, investors who have cash will rush in to take advantage of opportunities when others are selling. Investing is fundamentally designed to separate the strong from the weak. The strong make rare moves, make big moves, and make bold moves. What inexperienced investors do is that they perceive activity as actual progress. Folks, activity is not progress in the stock market. Patience and timing is progress in the stock market. Now, can all investors time the stock market? Absolutely not. But patience is a quality that I believe the stock market does a good job at testing us at. If you're patient, you're likely to do well in the stock market. If you're not patient and you're going to rush in and make big decisions, you're likely to get called out and you're likely to be in a lot of trouble. You know exactly what I'm talking about. If you buy something and it tends to go up, you brag about it. Hey, my stock's doing well. But if that tends to crash, you actually don't even want to look at it. Folks, this is an indication that apps like Robinhood that make it easy to invest in the stock market are double-edged swords. They make it so easy that you can rush in without doing any fundamental research, without understanding what your cost basis should be. You rush in and you take a look at the price of the stock on a day-to-day basis, and you try and say, okay, today's the right time to jump in. I've talked to many individuals who said to me, oh, Airbnb is a great stock, Palantir is a great stock. Folks, on what basis are you deciding that these are great stocks? Do you know about the company? Do you know how much money the company makes? Do you know what the number of shares outstanding are of the company? All of this research needs to be done before you invest in anything in the stock market. Just because you click a button and buy, that doesn't make you an investor. And folks, I want to be as clear as I can. I expect this video to get less views than all my other videos. I potentially even expect this video to make some of our viewers and subscribers unhappy. But to be honest, I'm not here to win a popularity contest. I'm here to help as many of our viewers and subscribers as possible. If you believe that using apps like Robinhood and essentially clicking that buy button makes you an investor, I have news to you. You could be living in La La Land. In fact, let's go back to that Bloomberg article. According to Nir Eyal, who's a former lecturer at the Stanford Graduate School of Business, he says this. He says that products like Robinhood are designed to feed the desire engine. In other words, they make you addicted to them so that you can engage in more activities, buying and selling. Folks, you're not going to make money buying and selling in the stock market. You're going to make money by buying the best stocks at the best prices and holding over an extended period of time. Also, the tax implications are in your favor. Long-term capital gains tax is less than short-term capital gains tax. Here's what Nir Eyal says in this fascinating Bloomberg article. Eyal says that the most engaging designs work like this. A good product has triggers that pull people in. Then it needs actions, particularly simple and easy ones that remove friction and help users accomplish what they came to the app for. In other words, if you can log into Robinhood and you can quickly just invest, click the buy button, you feel like an investor. But the fact is, are you a real investor? Because are you really making money, or are you just someone who's taking some actions without doing the research that goes into investing? Folks, investing is fundamentally a boring job. Investing is fundamentally looking at a lot of numbers, looking at a lot of sheets, creating projections, and allocating your cash accordingly, making sure that you allocate your cash in different sectors. I can tell you that my cash is allocated in the technology sector, in the healthcare sector, in the banking sector, and many, many other sectors like energy and cyclical. So you have to be able to do that research and identify what stocks you want to invest in those sectors. If you want me to do videos talking about the sectors I invest in, as far as how my $10 million portfolio is invested, let me know in the comment section below. I'll be happy to explore that. But Eyal also says getting people to commit things like time, effort, or social capital, meaning tell other people about it, is what Eyal calls investment, increases the likelihood that they'll return. Repeat enough times and a feedback loop, meaning a habit, is formed. The activity becomes a habit. Now, the Robinhood app in particular has been designed to be highly addictive. Here's an interesting quote from Brett Steenberger, who's a professor of psychiatry and behavioral sciences. And he said this is super interesting. It's a different technology of high stimulation and high distractibility. With the traditional brokers, you haven't had that. So basically, Robinhood makes it easy for you to log in, makes it easy for you to invest, makes it addictive, makes you feel like an investor, whereas you were not an investor in the past. And the longer you stay on their platform, the more you buy and sell, the more successful Robinhood becomes. However, if you spend hours and hours tracking stocks, following daily commentary of stocks, getting emotionally invested in, oh, my stocks went up, oh, my stocks went down. How's Bitcoin doing today? How's Dogecoin doing today? How's this stock doing? How's that stock doing? You will not be successful in the stock market. The only people who will become successful doing that will be the people who keep you on their platforms to keep you engaged so that they can make money. I'm advising our viewers and subscribers to not spend excessive amounts of time in the market. And I have to tell you, when the stock market goes down, people naturally become disenchanted. I'm not talking about that. I'm talking about a fundamental approach towards stocks, which involves waiting for the right opportunity, investing, keeping an eye on things, but not spending time daily on the stock market. Thank you so much for watching, everyone. I hope you learned something new. If you did, please click the like button, please subscribe, please enable notifications. I would really appreciate that. And I'll be releasing more videos to help you learn more about stocks and investing on our channel to help you become more financially successful. I want you to know that if you're patient about building wealth, you will have it raining money, but it does take time. I want you to be patient and I want you to build wealth slowly. Thank you so much for watching. Again, please click like, please subscribe, please enable notifications. I'll see you in the next episode of Ignition Time. Take care. Bye.